Welcome to Trade Ideas. I am Brian Price, joined today by Tony Greer, founder of TG Macro and the author of The Morning Navigator. Great newsletter, great man, great analysis. We're so glad to have you with us.
Thanks very much, Brian. I'm happy to be here.
Give me some perspective of what we're seeing in oil, both recently and then historically.
Sure. The oil market's really interesting because we're in the middle of a historic sell-off, right, in terms of magnitude. I think it's really important to understand how we constructed the rally. So let me go back and go over that really quickly. I think it's critical in understanding a trade setup that I'm going to try to put on a long energy trade here. Why did oil rally from 25 to 75? We had a synchronized global growth story that was running along rather smoothly, and we had the Saudi Aramco IPO on the calendar for the end of this year. We have to think back now. Mohammed bin Salman went on his moderation tour back in April or May of this year. What he was trying to do was sort of soften up the New York markets and prepare for his trillion-dollar baby, the Saudi Aramco IPO, right? Remember now, they were looking for a New York Stock Exchange listing this year when only 2 months ago, in July of 2016, we learned that the Saudi government was directly implicated in the 9/11 terror attacks, which killed over 3,000 people on U.S. soil. So he had to go over here and soften up the capital markets. He met with all the captains of industry, from Bezos to Branson to Brin. He met with the MIT endowment and the Harvard endowment. He met with people in Hollywood looking to raise money for his Aramco IPO and tell the story that he was going to be able to get oil back to a higher price, right? Then he came out and shocked the world, and he sent Khalid al-Falih, his oil minister, to OPEC meetings, and he got them to cut production. He got them to adhere to the production cuts, which is even more significant. So we saw oil inventories draw down. We saw the market go into backwardation. And we saw the market rally from sort of the mid-50s to $75. And the people that he visited on that tour were able to capitalize on that trade. They were both able to capitalize on the rally in flat price in oil, and they were able to capitalize on the carry trade, because as the supplies dwindled down, the market went into backwardation. Speculators rushed into the market. So then we eventually got to a point where we had about 500,000 long contracts positioned in WTI. The trade community draws a bullseye on that right away. This is a position that's got to get popped, right? So over the summer, the Aramco IPO was canceled. And that shook me, because I've been an oil bull the whole time. And that shook me to my core, saying they might just turn on the taps here and spill oil into this market. And I was amazed. I sold some of my positions. I was amazed that it had no effect on the market. It was a little dip and it came right back. So now oil's in the mid-70s and I get back to full length position. And on October 2nd, Saudi journalist, dissident journalist, Jamal Khashoggi walks into the Istanbul consulate and doesn't come out. The following day, October 3rd, crude oil prints a new closing high of 76.41 as this news is starting to circulate around the globe. And then crude oil takes a 1-month nosedive to $65 in October, right? It doesn't stop there. It takes another $10 nosedive through $55 yesterday. Now, this pullback has become so swift and so steep with so much destruction in its wake that I'm ready to buy into this. Because a couple of reasons. Number one, I think that the recession fears that have been circulating around the market against this pullback in crude oil are dramatically overblown, okay? The way I look at the US economy, there may be a drag down from global economies, but here in the US, we've got confidence soaring, and the recessions usually don't take place for a year and a half after we get to a peak in confidence. So we haven't even gotten to that peak yet. The employment situation here is super strong. Our PMIs are all running above 55. I mean, the US economy is humming, okay? So I think that's gonna lend some strength. The second reason I like it on this dip is because nothing has changed about the physical markets, right? In October, China imported 9.5 million barrels a day of crude oil on average, right? That's up 30% from October of 2017. What's going on is the Chinese teapot refiners, private refiners, are coming back after their maintenance season, and they've started to buy oil. We've got the US refiners coming back now after their summer to winter maintenance season, and they're going to start to buy oil. Now, we started to see this strength reflected on the way down, but it was very tough to see, right? Because the market was getting washed out due to a couple of blowups, okay? But what went on behind the scenes was that during the commodity rollover, while the index positions are rolling into the next month, as the rollover finished, there was a huge rally in strength in those spreads, which to me were sort of those users coming back and buying those cheap contracts for delivery that had just been destroyed in the wake of this sell-off, right? So the reason that I get confident about buying this blow up in oil is because there's such an obvious path of destruction in its wake, right? Unfortunately, it starts at the very top at $76 with Jamal Khashoggi disappearing. It has taken out all 400,000 of those spec longs in WTI. The market has undoubtedly started to turn towards a short position. As oil pulls back into the 2016 highs and 2017 breakout levels of the mid-50s, that's about a 50% retracement of that move from 26 to 76. So this is where I'm going to look for this steep sell-off to hold. Also in the wake of this sell-off are the second blow-up of Pierre Andorran's oil fund. If you recall, Pierre Andorran has already blown up one long oil fund. He raised money and went out and potentially blew up another one, which is fine with me if he's an oil bull, and he may eventually be right. And then we saw the spooky video from Option Sellers CEO, who claimed that crude oil going down and natural gas rallying was the rogue wave that took out his firm and lost untold amounts of money right now. I'm sure that will come in, but that news will come out. But he was actively in the oil market bailing out on length, and in the natural gas market bailing out on shorts. And it's been pretty clearly proven by the forensics experts in natural gas that was indeed the signs of a blow-up taking place. And if you look back historically on market moves, the blow-ups usually leave a tradable bounce, right, in their wake. There are entire strategies based on sitting around waiting for blow-ups to happen. And I feel like this is one of them as crude oil pulls back into a good support level here. I think we can express this in the markets by being long. There are two trades that's set up for me. You could be long USO down here. It's trading around $11 today. So I think you can buy USO between 10.5 and 11.5 and risk the rising trend line at $10. And I think on a bounce, we could see USO back up to 13.75, 14. And there's even, I think, a better risk reward trade lining up in unleaded gas. In the ETF UGA, that's the ticker for the unleaded gas ETF, that is pulled back to about $26. And I think if you buy that between 25 and 26 and risk 24.5, 25, that will, you can put your stop on the other side of a rising trend line and take advantage of the steep sell-off. And in gasoline, I think that UGA ETF can retrace all the way back up to 32.75 or 33. So you've got over a 20% shot at upside there. So what I think is going to happen while this story turns into, number one, a pile on the short oil trade and the fact that this move in oil has made it to the front page of Field and Stream and every other periodical out there, we're starting to get sentiment go really negative in oil now. That's generally a time that I want to buy. And lastly, as this story turns into a game of 3D international chess, I think Mohammed bin Salman, as of today's headlines, has just been given a green light to try to get the oil market back in shape.
With all of this in mind, walk the folks at home through the trades that you're putting on to express all this information.
Yeah, so I'm going to look at USO, the WTI crude oil ETF. I'm going to look to buy that around 11. I want to stop out below a rising trend line that's about $9.80 now or so around $10. I think that we've got upside up to, call it 14. Fair to say 14, and then we'll see. That'll mean crude oil back up into the high 60s, low 70s. And the next lined up trade that's similar to that in unleaded gas, I think might be even better risk reward. We want to buy ticker UGA. That's the unleaded gas ETF. I think we can buy it around between 25.5 and 26.5. I want to risk 24. That'll put it below the rising trend line in unleaded gas. And I think that we've got an upside trade of 32 or 33, and then we'll see. I like to buy these dips here. I like to get to my objective, take half profit, take a fresh look at the world, and see where we are.
Fresh look at the world, see where we are. And a 2-for-1 trade for today.
Yeah, why not?
Hey, Tony Greer, one of the best newsletters out there, Morning Navigator. If you don't have it, sign up for it. It's good stuff. Tony, thank you so much for being with us today.
Thanks very much, Brian. That was great.
So Tony is bullish on crude. He likes buying the WTI crude oil ETF, the USO, between 11 and 12 bucks with a stop at $10 and a target of 14. Additionally, he's a buyer of UGA, the unleaded gas ETF, between $25 and $26 with a stop below 24 and a target of 33. His timeline for both trades is 4 to 6 weeks.